Hey guys, how's it going?
Really
Welcome,
going pretty
welcome to the
good.
stream.
Thank you.
We're live here with Surge, and we are going to be live with Jagger from Mr. Orderflow in a second. He's just having some mic issues. Let's see if he's good.
Yeah, it should be okay now.
Hey, yep,
Hey,
sounds good.
how is it going?
Good, good. How are you?
I'm good, I'm good. Hello, everybody. Thanks for being here, mate. Yeah.
Did you guys trade today?
No, I just got home like an hour ago. I was pretty busy.
Mm,
Yeah. Did you?
I traded a bit.
nice. Yeah, I traded a bit too. What'd you trade, Surge?
Mostly indexes. I got some shorts of the ES, NQ, and the Russell.
Mm-hmm.
It was pretty good, but overall, scratch day.
Scratch day. Got it.
Yeah.
Cool. So you guys want to go over how both you got into trading and how you met?
Yeah. Serge, do you want to start? Your turn.
Yeah. So basically, I got into trading in 2014. I was still in college back then, and I just started as everybody started basically. I started with Forex and CFDs and weird stuff like that. And then I got into options in around 2016, 17, especially into selling premium. And then in 2018, I started going into order flow and auction market theory mostly. And I still use that as my framework to this day. I accelerated my trading in the past few years. About 2 years ago, I met David via Mr. Orderflow because I needed some kind of a support group of like-minded people. Trading can get really lonely if you don't do it with anybody else. So that's how I found the community, and it instantly clicked because we're basically all doing the same thing.
Nice. Awesome.
Yeah.
We've had Jagger on before, but for anyone that doesn't know you, do you want to just introduce yourself?
Yeah, sure. I got into trading around early 2018, and I started with crypto, and it was a nice run. Like I was lucky enough to start with some kind of order flow from the very beginning, like open interest and trading on chain, looking at the flows on the on chain, etc. So I skipped all the kind of usual candlestick patterns and the normal way that everybody starts on. So so from then I started to trade already about 2020. I started with indices, and over my journey, it was order flow since forever, and then it was equities, but at the same time I was already looking at the macro. I was looking at treasuries. I traded pretty much everything that there's out there that kind of has some volume on it. I traded. Yeah. So now my main market now is our treasuries, our bonds, both European but mostly American.
Mm-hmm.
And but I'd like to call myself like a holistic trader. Like Serge always says, I trade what's moving.
Yeah.
I trade what's moving. Yeah.
For sure.
And it was nice to meet Serge. We met on the Mr. Orderflow server, and since April last year, we started to work together on a project. And it's kind of almost in beta testing, but I enjoy working with Serge.
Awesome. Yeah, I think that's a good segue into bonds. First, do you just want to go over what bonds really are for traders that maybe only trade the NQ that may not know?
So, what are bonds? Let's start saying that everything in the world is mostly everything in the economy is everything is based on debt, and bonds are simply debt. When I've got the almighty Secretary Bessent, the Treasury Secretary Bessent on my screen here, and this is the website of the U.S. Department of the Treasury. They are responsible to kind of manage the finances of the United States in this case. So there are a few ways that government can fund the operations. Like you hear a lot about. Even lately, we are in a mild kind of short shutdown again, unfortunately, which is again the case, like it was for more than a month, for the longest shutdown we had ever. But it was mainly because it was the spending bill wasn't being agreed. And so the Treasury is responsible to, when there is an approval of spending, the Treasury is responsible to make sure that the government has enough money to spend on what they wanted to spend on. So they can collect taxes, whatever, like duties, taxes, and whatever, but mainly it's going to be debt. They issue bonds. Bonds are mainly structured in bills, notes, and bonds. Bills are like the shorter term debt, and is the main funding mechanism for the governments. Like they are issued almost every week, and that amounts for the most of the volume. They issue the debt, and it is like, give us money, we promise that we will repay our debt, and we will give you a coupon every year or so. And so some countries are higher quality, so it will be easier for them to get funded basically via this process. Others are less, so they will have to repay more in coupons every year. Okay. And that it is. I think that it is a good general overview for now.
So just to make it a little bit simple, it's essentially an IOU from the government that you're buying their debt in return for a return on your investment, maybe a percentage.
Yeah, exactly. Okay. That it is. So I'm buying a bond. It's like giving money, like lending money to them, and they are promising that it's like a promise of returning the money at the end. Plus, you earn an interest because it's like you go to the bank and get a loan, but in reverse, basically.
Got it. Okay.
That's it simple, and everything in the world is money. That's how money gets out of nowhere. Yeah.
Exactly.
So what we trade are treasury futures. So there are futures, but that's another kind of that's another kind of product. No.
So why does this matter to someone who only trades, for example, ES or NQ?
So bonds are very high quality assets, and they are kind of the safe assets. So when there is turmoil in the market, generally they will be where the money goes. So equities might sell off, and treasuries are among those assets that will be bought. So if it gives you kind of, even if you don't trade them, it gives you kind of a sense under certain circumstances. It will give you a feeling of what the day is, what you could expect, what could you use as a correlation, as a very solid correlation, because treasury markets are like, if they start moving, there is you can be sure that there is a good reason for them to move, and they kind of can help you keep your trades longer, know what is the real direction, and yeah, there are certain circumstances where you when everything is calm, like I don't know, ES is dumping, it stops for a moment. It's typical, no? It's forming the range, it's stopping for a moment. Everything has stopped. You have the ZN, which is the main market we will get into there, and everything is waiting. And ZN will always make the first move, and then you have maybe ES continuing dumping. That will give you a solid idea that isn't allowed to buy, for example. No, you just wait and see you will have that extra moment to decide what is the direction of your trade before getting into a trade, for example. No.
Got it. Yeah, I think let's dive into that a little bit deeper. But first, we have some questions.
Sure.
Just a reminder, guys, the giveaway link will drop at 50 likes.
Yeah, and also sorry for my English, but I'm Italian. Sometimes my English works better, sometimes it works less. So yeah.
No, you're good. We have a question here from Schrodinger's Stop Loss. That's an awesome name. So would you say that the US is full porting debt right now?
Yes. Well, I wouldn't say so, because treasurers aren't really moving. So it's kind of a weird situation, but they're not down. So also at the same time, there are multiple ways of correlation where there is a lot of like there's some real issue, which is really, I don't know, like a real risk of a heavy risk of situation on the market. Then you will have a very, very clear correlation. Other times, for example, yes, can just sell, but they can be a technical sell. No, it is just like deleveraging. It's a normal sell. Like, for example, today, the range it's sold, but it is still within the yesterday low, so it isn't so bad. I mean, but at the same time, you have ZN over here. You have.
Can you make it bigger?
Sure. Here you got ZN over here. Over here ZN, and here you got ES. So you can see the correlation is kind of clear. No, this is the fifth. This is around the open, and this is around the open as well. So yeah, you've got the ZN going higher, and if ZN keeps going higher, you will get ES going lower. But it isn't said. Both are kind of within the yesterday range. But yeah, since they opened, the correlation is inverse. I don't have my ladders working today because I got some technical issue, but yeah, the charts should kind of make it clear. Wait. So this is ZN, it's moving higher. You got ES getting lower.
Okay.
Yeah. For as long, for example, you've got the ladder over there. We are close. We have a good example, no? Probably if you are looking at the ladders, if you've got ZN on the side, you just wait for ZN to take the step, and if it goes with some volume, you will have ES going lower for sure. Almost for sure, yes. But not really a wide range, I would say. Well, the treasuries are also very, very structured in nature. They are safe to trade. They are good main asset to trade if one wants. But I know a lot of friends and traders that just use them as a correlation because they trade indices maybe with options, and but they always have a ZN open somewhere.
Okay. Yeah. So let's do this. Let's pretend that we have an NQ trader or ES trader, and they've never looked at bonds before. How would you suggest them to start? Maybe we start with one extra chart, for example.
Yeah, you can see that I have a lot of stuff going on here.
Yeah.
And this is it. This isn't. So I've got a screenshot. These are all my ladders. Okay, so this is kind of a lot of stuff. Normally. So for an NQ or ES trader, so you've got something called the yield curve, and it is the most watched kind of ensemble group of instruments in the world, and they are the 2-year, the 5-year, the 10-year, and the 30-year treasuries. But you've got one that is the most important one, and it is the 10-year, which is expressed in future by the ZN,
Okay.
which is also the most traded with the future with the most volume in the world as well,
Okay.
as a single outright instrument.
And
So
that's the 10-year note?
Yeah, and that's the 10-year note.
Okay.
Exactly. It isn't that simple, because if I go deep into the technical aspect of how the futures really are calculated, we can talk like for 5 hours.
Mhm.
But yeah, a trader should definitely look at ZN, and you can see here on the charts that the correlation today is wonderful. So it's proving my words.
Nice. That's
Yeah.
awesome.
Yeah, definitely.
Got
And
it.
are there any other questions? Or
Yeah, there's a question here. U.S. Treasury lays out 125 billion refunding plan. He's asking, that was the news. Could you explain it?
So I didn't hear that news, but mainly it is when basically they asking more money for covering all the debt, basically.
Okay.
So every quarter, just like the FOMC, the quarter FOMC is the most important one. At the end of each quarter, you've got the Treasury Department laying out something called the quarterly refunding announcement, and that is the one most important event for the quarter for the Treasury. And where is it? Most recent quarterly funding, and there you go. And here they explain how for the next quarter they are going to collect money, and that will give the size of the treasury auctions and so on and so forth. But I didn't hear of this extra 120 news for today. So yeah, that's the thing. They asking for more money to refund old money, basically. It's an ongoing process. That's why it's a mess overall. But
Okay.
but yeah, that's the idea. You mostly see everybody sees on the financial news, on the calendars, whatever you
The
see
auctions.
the auctions. So
Yeah.
that is how the treasury the issues you've got like the 10-year.
Okay.
And if it's like sometimes it will move the market, so everybody should pay attention to them. Other times it won't, because it will be just a normal auction. Sometimes it will be a very good auction. Sometimes it will be a bad auction, and that will, if it is a bad auction, it might move the markets a lot. If it is a good option as well, we always look at the excessive from both sides. So yeah.
Got it. By the way, guys, the giveaway link is pinned in the YouTube chat right there. If you're on X, just go to YouTube. You can find the giveaway link. Let's go to Serge. Let's take a look at your charts and sort of what you're looking at and how you're analyzing the market.
Okay. Let me just set up this. Yeah. So basically, my framework is the auction market theory framework. First of all, of course, I look at the macro picture. I check out what are the current narratives in play, how the treasuries markets are behaving, the short-term interest rates, and what is the expected news, and what's the current developing narrative, and how far are we into the current narrative, because narrative presents the most opportunity to be traded in when it's just fresh, new. It kind of gets stale after a while, so I switch from when a new narrative is presenting. I'm more focused on order flow, correlations, what's happening, how different markets are interacting, and as the narrative gets staler and staler, I just switch technical setups. This is my volume profile chart for the ES. I'm just pure auction market theory trader and using order flow as my execution framework. I'm looking at as much objective information that I can. I don't draw anything on my charts. I'm just using market generated information.
So
no
for someone that
sure,
for someone that hasn't used market profile or volume profile, can you explain sort of what this is?
Basically, this is just an aggregation of volume at price. It's just the representation of the market auction, how the different participants are interacting at each price level, and basically it's a very good depiction of how the auction is unfolding. Yeah, some people will say that it's not relevant in today's markets anymore, but I find that it still is. Like a buying tail is still a buying tail, a selling tail is still a selling tail. It just gives little clues and telltale signs about how value is perceived and how different participants react around the levels.
Yeah.
Basically, it's not just about looking at levels per se and saying, here's a level, I'm just going to buy that level, or I'm just going to sell into it, because it's more nuanced than that. It's about how value is formed, how complete the profile looks, how much value overlap we're getting. Do we still get the same participants that come in at the same levels that we did in the past? And basically, you have to answer all of these questions. And this is my higher time frame view, looking at the volume profile, and then I'm going down to footprints when I'm about to trade. And when it comes to accessing my trades, I use footprints, and I execute on ladder, basically.
So you're not looking at a candlestick chart, essentially?
I do have candlestick charts, but it's the same market profile information that it's overlaid on the candlestick charts, such as previous highs, lows, value areas, points of control, and that's mostly it. I can show you one of the charts if I can find it.
Cool. Yeah, while you're working on that, let's get to a question here. Is there high spreads in ZM?
If there are spreads on ZN, there is no spread on ZN, mate.
ZM. M for mango.
ZM. I don't know about such instruments.
I think you meant ZN then.
Yeah, probably. Yeah. Wait, again, I will show a screenshot. So what I've got here on the screen, because I see that in the comments that somebody says that there's a lot of charts. Look at my ladders, and now you can say that there is a lot. So from the left to the right over here, we've got ZT, the 2-year, the 5-year, the ZN, the 10-year. Well, it's 7, 10 years, but whatever. The ZB, so the longer, and the UB, so the longer end of the curve. Look at how much you've got here. 4,618 and 4,668. You've got literally no spread, not even before an event you've got in a spread. I mean, so yeah. Also, it's not like I see another question, and it is if it is more for investment. No, you can day trade them. It is a wonderful way of trading. It is a safer way of trading, and it is a very different way of trading as well, because it is very calm. It isn't like erratic. You can be more kind of strategic. And as I said previously, treasuries are very structured, so they generally won't play tricks, and they will respect levels a lot. That's why it is also important. It might be important for everybody to always have ZN somewhere, like where you can check when you are unsure what's going on, etc. I'm not saying that you have to study the whole treasuries ensemble, but just start maybe with having the ZN, because it really might time your entries on the equities. Then if you want to trade them, generally where people go first is the UB. because it's less liquid and it appears to be like more appealing to scalp or something. Generally, people just start scalping them for 1 or 2 ticks because they are $31 per tick, and then eventually size up. But then
which one is the UB on those ladders?
It's this one. It's this one over
I
here.
don't see your cursor. Maybe you can just zoom into it or draw on it.
Yeah, this is UB.
Okay, I see it now. Yep.
It's in the center of the screen.
Yep.
And yeah, so it's like at this time it's like I don't know, less than 1,000 per level, but it is much more sweepy, and it's mostly easier to get in and out. So everybody will just go to UB. I don't suggest that because it doesn't represent really well, but I will go with ZB or even study ZN properly if one wants to go into treasuries. So yeah, you can definitely trade them, and it is a very wonderful way of trading. Definitely, yes. But cool. Yeah. Then on my screens, I've got pretty much everything there is out there, because as I said, I tried what's moving, because treasuries will be very correlated with some currency exchange futures, which will be the yen, the 6J, which is also a nice market to trade, the euro, and the Swiss franc. When you have a perfect, nice, positive correlation, that means that on ZN signals, you can get in on more volatile markets and hold them for more if you're more comfortable with that. Or maybe you miss a move on the ZB or the ZN and they don't turn back, you still have an opportunity on the 6J. Yeah, that kind of stuff. So,
okay, cool.
Yeah.
Serge, sorry. Let's get ready to go back to your chart if you have that ready.
Yeah. 1 second.
Someone said, Haven said, I knew of a guy who only took setups on 00 and 16s. Do you prefer any digits for placing orders?
There is a very, very specific reason for that 00s and 16s, and they are options levels on the treasury markets. And yes, and that's the reason why they are the boundaries, not the options level, like, and yes, they will respect those levels, so you can really just trade those levels. Yes, that's true.
Cool. All right, Serge, let's bring up your chart. So
my lower time frame chart, basically the candlestick chart. I have overlaid all the information that I can see on the volume profiles. Basically, you have the value areas, you have the yesterday's value area overlapped on today, previous week's value area, and the monthly value area, because you don't have the profiles in view, the weekly and the monthly profiles in view, and it's the value picture is kind of important, and how we're trading relative to those areas. And then I also have plotted like last week's lows, last month's lows, yesterday's highs and lows, and that's about it. I also use a VWAP just to kind of gauge how far we're from that market direction.
You're using RTH VWAP?
Yeah, RTH VWAP. I also have a volume chart for each instrument that I use that to assess rhythm. That's more granular than this. For that, I use an ETH VWAP, but it's not the main piece of it, basically, but still the auction market theory framework. And I use volume and relative volume. That's it, basically.
Okay. So based on your methodology and how you look at the market, how would you describe today's price action? And then after that, if you want to walk through some of the shorts that you took and the reason behind it.
Yeah, sure. So basically, today's market action. First of all, we'll look at the open. After we've analyzed the whole week, we kind of opened inside yesterday's value. It was a very poor value area. We opened inside yesterday's value. Automatically, we expect to kind of fill out the value area and complete it, make it more robust. We had a low volume node, a low value area around 6950 on the ES. And
Could you
I
just
was looking.
draw that out on your chart so it's a little easier
Yeah.
to see?
Yeah, it was around here.
Okay.
You can also we had the last month's volume point of control here, the black line basically. So the hypos for today would have been either we would test the upper bound of the value area, and if we manage to break it and build some value around that, it would be a the high volume node that we had at 6970, around that. Yesterday's high volume point of control,
Okay.
basically. If we would have built here some value, then I would have looked for longs, acceptance higher into the previous week's value area, which is the blue box basically. Here it's kind of between everything because we are still inside the monthly value area, inside previous day's value area, and still inside previous weeks. So it's kind of a tricky zone to navigate when it comes to hypos and preparing for that. But the main hypo would have been if we cannot get above last month's volume point of control, and if it acts like a key level, and we start building some volume here, we're just going to watch the market for some access if we can get some shorts around that, and we're going to try to be less aggressive on as moves develop, because I tend to get into positions with small sizes on micros, and I tend to add into them and build them as the trade develops in my favor. So it's not really a scalpy way of doing it, but it works on very good on certain market conditions. On others, not so much. On days like today, it would have come back and eaten a lot of the profits. So the reason for it was a good day. I followed my plan. I followed my setups.
Yeah.
But the market didn't agree with that.
So let's go through it. Let's go to an actual specific trade, and then let's also talk about how you were using the information from the bonds markets to influence your decision making today.
Okay. Okay, sure. 1 second.
Well, there is a specific example today of the 16th that the guy mentioned. Like that is the way 16th on the yen is where the ES to take the turn to then dump for the rest of the session.
Interesting. Yeah.
Exactly.
Okay, so do you want to get those charts ready, Jagger? We'll go to you after.
Sure.
Yeah, I'm very curious to see. Because
I'm trading view, so it will be easier for everybody.
Okay, cool.
Yeah, I get that ready.
Yeah, because when we were inside the range, it was just chop back and forth inside yesterday's value.
Yeah,
and,
there was a lot of chop. Indeed, it was pretty hard to get access to the trade. I'm switching to my footprint chart.
Okay.
Window. Here it is.
Could you make it a little bit wider?
Yeah,
horizontally?
sure. Is this better?
Perfect. Yep, that's perfect.
Okay, so basically, this is the same thing that we saw. This is 5-minute chart with footprints on it. The key trades would have been selling the top here at the failure to break the previous week's value area low. Basically,
previous week's volume value area low, or how are you determining value?
Yeah,
okay.
Previous week's volume area low. It was right this area here.
So that's a look above and fail, essentially. It's a perfect setup.
Yeah, exactly. But yeah, in hindsight, of course.
Exactly,
in reality, it's hard to just wait for the axis, basically. And the axis would have been the high liquidity pocket here at this delta, but it would have been a perfect short. Like I got shaken out of it. I tried to keep re-entering on it, and I didn't maximize it, honestly. And waiting through to staying in the trade, that was very hard to do because it kept coming back, and you didn't have a clear read on what was going on. The latter was most useful for that today, but it was still pretty hard to manage it, especially with my style of trading and piling in contracts on that. I didn't pile in anything, honestly. I just tried to. I put on my initial size, and then I went 2 times. I added in with half of that, and it's still. I regret doing that. It wasn't the most appropriate decision. I should have just ridden my initial size all the way of the move, but that's the way it
Yeah, I mean,
happens on days like this.
thanks for being transparent. I mean, that's what it is. Sometimes you get it, sometimes you don't.
My best setups in my playbook are opening drives and initial balance breaks. That's.
Do you want to explain what those are to someone who might not know?
Opening drives is when the market really opens and it starts one time framing from the right off the open. Basically, you see high volume and rising delta with the move, and very little overlap between the candles. So you're in a kind of one time framing situation. That's the most ideal for me, because when that happens, most of the move happens in the first hour. So it kind of invalidates my second best playbook trade, which is the IB break, when we have a really wide initial balance, which is the first hour of trading after the US Open, for US markets, of course. European markets a bit different. When we have a really wide initial balance, the initial balance breakouts don't work as good anymore, or at all, actually. For a good initial balance breakout, you need a small initial balance, you need a kind of contracted range, and ideally you would love to have a volume accumulation while we're inside that range, rising volume with high delta pockets at the edges on the footprint. Then you know that when it happens, you could have a really good unwind, and you could have a really good breakout trade that can turn into a trend day, basically. So these two are kind of when one happens, the other doesn't. So that's a good part about it. The hard part is recognizing when you have an open drive or an open test drive when the open happens, because you could also have an open, it tests a key level, or something happens and then it just reverses and it drives. It's not the case for each day, and for equities, when they switch regimes and when the equities switch gears, sometimes it's hard to ascertain what's happening exactly. But because of the volatility we had in the last few days and the ranges in the candles, it made it pretty hard to trade and adjust to it. And you always have to keep adjusting your setups. And I'm a big believer in having that feedback loop in with your prep, follow your process, then debriefing, and it feeds into the next day, and it just creates this feedback loop that makes you a better trader over time.
Starting Thursday, we've just had an increase in volatility, and very unclear long-term perspective-wise. Right now, it looks like we are bouncing off the naked point of control from last Wednesday, the 21st, which is interesting. I don't know if it's going to hold, but yeah, that is essentially the price action today. What do you want to just go to like the current price action on your volume on your footprint there? What do you think about the current price action now?
Yeah, so the current price action, when we see a move like this, basically very high volume, extremely high delta, for me, this would have been an exhaustion. Like, this move would have been exhausted for me. At least that's what I expect. I wouldn't play continuation on this. Yes, it would have been a nice trade in hindsight, but I mean, I wouldn't have hopped onto this. Like, it's just below the yesterday's previous value area, and it's below last week lows. We got the rejection here anyway. Small reversal as well, and yeah, it's kind of aggressive to the downside, but I think the move's already over. I mean, breakouts, selling lows and buying highs today was not the play. Waiting for retracements and kind of getting confirmation on that, and selling smaller consolidation zones or buying smaller consolidation zones would have been the right place to do today. So it kind of depends on how everybody's approaching these and trading them. But that's what I expect here. I expect the exhaustion, but at the same time, we don't see any aggressive buying coming here. despite the drop. So we might have still a bit to go, but
What do you?
flavor changed. Basically, it's not going to
Yeah.
go in the same way. It's going to be more of a two-way trade. At least that's what I expect. It's not going to be very clean price action. So for somebody that's scalping, I think this is great price action. For me, not so good, because I would have to sit in the trade for a long time and I would have to take a lot of heat. So I can't build it. I can't add anything into it.
Yeah, I hear you. What do you attribute the rise in cumulative delta to? If you look at the cumulative delta, it's been sort of going up as the price is going down. Do you think that is absorption, or what do you think is going on there?
I'm not sure that CBD can be still used so much in futures, because you know that it's just 30% of the derivative volume, so it can move lower on pulling, while and so no real volume, just pulling, because it has to follow the underlying. But in the meantime, the buying that there is on the small dips will inflate the CBD, but that will be kind of artificial, no? So I don't know. It's always difficult to. It's the same on some of the treasuries, like the UB, which I said previously. It is a bit. It's not the best one to go. It can go lower the whole day, like a whole figure, but it will be all on pulling book rather than real selling. No, not so much selling effort than just following the underlying. That's it. So yeah, that's my take on CBD. Some days when it doesn't make sense, it just doesn't make sense.
Yeah. I agree with Jagger. I don't use it for direction either. I just use it for comparison between two very short points in time, like very close points in time, like micro high or micro low, and comparing between each other, and especially the pressure between correlated instruments like ES and Q. Russell, not so much. Depends. It's kind of the couples, and when we have big moves, it moves in sync. It's correlated, but the Russell is kind of decoupling from ES and NQ usually, especially at the open. It does its own thing, most of the time at least. But so I'm looking at CBD on ES and NQ, because sometimes you can get clues, like you can have the ES dropping, the NQ just dropping, and they kind of start stalling and playing around. But you see the CBD on one of them goes very directional while the other doesn't. So I have a trade for that. I just wait for one of them to just give it up, basically. I don't know which one, but it's bound to happen at some point, and we can get a nice directional impulse. If it reverses or not, I don't know, but it's a nice scalp for that usually.
Cool. Jagger, let's go to your screen and
sure,
get those examples.
Sure. I got this. Okay, it's ready. I got charts, so it will be. They're simple charts, so it will be clear for everybody to see. So it's 5 minutes chart for both the ES on the left and the ZN on the right. You can see on ZN, I got lines on the 16th, the 24th, the whole one, and the 08. That's because options are quoted in quarters. So you will have a strike every quarter, and that will be in all this. This is a whole strike, no? So it's quite, while on ES it's like 5 points. Here you've got from 16 to 24. So here's a good example where you could, like, if you get a sense, like for no reason ever, you should pull out a ZN chart, plot the lines, and just short the ES when ZN is at support on one of these levels. That's not the idea, but yeah, after you study it for some time, where is the?
Can you make both charts a little bigger?
Sure. I think that it should get the idea. Yeah, ZN is lower, so it does look like doesn't look so good.
Yep, that looks good.
Let's
Easier
wait.
to read.
Shapes. I got the rectangle. Where is the open? I mean, it is over here. So yeah, so this is the area where it we opened, right? And on the other side, shapes, rectangle. This is where the rectangle is where the US equities opened, and you see that it is at the 16th. So nice coincidence, I would say. Nice extra information to add to one's tools. No. What I wanted to say is also, well, yeah, absolutely. Don't just take trades based on just this. I mean, I don't do that. I take a feel of it. Like I read the market, the order flow on the ladders. I see the movement. I see the volume, how it's flowing, and also treasuries have their own open. It is at 8 a.m. for the cash market, and then you have the 8:20 a.m. for the futures. The open outcry. It is the classic. But I would say the 8 a.m. since 8 a.m. it's already important. The price discovery for the session already starts, and that's an important moment. Then generally you have 8:30. There is the news generally. Then even if there's news at 8:30, maybe you have an extra sentiment check at equities open, because that's another moment where more money comes into the markets, and we need to have a feel of what that money will do. Will they dump treasuries and buy equities because there is excitement on the markets? Will they sell the equities in some kind of the risking event? So yeah, there are 3 times in the day, just in the morning, to get an idea where the correlations, the inverse correlation or positive, sometimes they could be both positive going to this in the same direction. That's why this alone isn't enough, but yeah, you've got 3 sentiment checks, I would say, during the day, at the very least.
So let me ask you a question. Let's say you somehow got into a short based on your strategy early in the morning. How can you use the bond markets to give you context and information if you should stay in the short, if you should cut the short?
Sure. Yeah. So let's say, well, get into in it right here at the top. Well, I mean, it's possible, but maybe not on the first try. No. So it breaks the opening low over here. It goes lower. It turns back higher, and it tests the open on yes. No. So during this time, you had the ZN rally over here, and it's turning lower. So completely opposite. On ZN, you will see it cleaner, very, very clear on the order book. You will very, very cleanly see that there is support here, and they won't get lower. On the other stream, on the order flow stream, we were talking about the zero prints, for example. No, zero prints are exhaustion, basically. You will see a lot of exhaustion on ZN, and it will be very, very clean over here, down here. And as soon as they kind of start breaking this little range over here, as soon as they go higher here, you can be sure that if you entered on this on the retest up over here, you could pretty much hold it for as long as ZN doesn't make doesn't make a lower low, like it inverts the intraday trend. You can definitely keep your short for the rest of the day. Like even now, they are kind of it's still holding the correlation. It's still holding. At some point, maybe at lunchtime, the correlation might break. So, but yeah, you should be done by then, I think. I mean, if you enter a short over here or something, you definitely made enough money for today. Yeah. So I don't know. Did I get the idea?
Yeah, essentially, you're saying look for the correlation, and until it holds, you can use, for example, the fact that the bonds are holding that level as confirmation and stay near short.
Yeah, exactly. Obviously paired with your with the stuff that you usually look at. This initially it should be an extra, like kind of an extra, and maybe it will also stimulate your curiosity to learn more about the treasury markets, and you will learn, because if you know about this correlation, you know that you can go long one and short the other, no? So you kind of maximize your exposure, one on a simpler market, on a slower market, no, so lower risk kind of, and the other more volatile, your usual market, but essentially yes. Then if you go further, you will explore correlations and how one market behave based on each other, and you will know that, for example, ZN will give you good signals on the yen, on the euro, and so on and so forth. So you can kind of put everything together and make a good set of extra tools just based on this kind of correlations. Yes.
Cool. Do you want to go through maybe one more example, maybe scrolling back to a previous day?
Of course, yes. Let's take a look if yesterday there was something yesterday. See, yesterday is the same, and even from the same level. You got yesterday's here, 16 holding, eventually moving higher, but that was not a good example, because yes, sold hard and this yen didn't buy so much.
So what do you do in that scenario, for example?
Here in this case, if I see that there is no correlation, maybe I just miss the trade, and well, I don't. It's not like I know this and I only trade correlations. So I won't focus on that. I mean, if yes is selling hard, like yesterday, me and Serge, we were in the call, and I was just selling bottoms on ES and just holding them. I mean, if ES moves, if I see a market that is just moving and I see the order flow pushing one direction, like, it is making a new low, it maybe just turns back for a little bit, but it dies off there. I'm kind of sure that I can sell that range, and if it breaks the low, I just hold it. No, so I just don't look at the yen at all, and I just keep on going on the market that's moving. No, but yeah, I mean I don't obsess about these correlations.
Okay.
Otherwise, yeah, you will get crazy, and there are better there are better confirmation that I have in my tool set than just correlations. You've got a nice example, for example, on the inverse, where when the yen sold from one of these levels, you've got the 112s up here. You've got the 112s, right? Over here, this range, and this is around the morning, and yeah, the treasury sold, and that was a very good day for ES. On the other hand, like, yeah, they started selling off about here, while the ES was buying. So sometimes, this was a perfect risk on in the dual regime between equities and treasuries. It was a good risk on example. You should still have your own edge. You cannot build an edge on just correlations, of course. It's just an extra.
Yep, for sure. I think that's important to understand, that you can't just start trading the opposite, because you're going to get wrecked.
Yeah, basically, yeah, this is for somebody that doesn't know what the treasuries are. This is a primer on how to start looking at them from a just price action perspective.
Cool. We have a question here. In hindsight, within your style, what would have been the perfect trade for you this week? We'll go to both of you. We'll go to Serge first.
Yes.
So, what would have been the perfect trade for you this week?
Probably yesterday's short, right from the open. I haven't
Okay.
traded yesterday, so I can be home to prep in time to prep and have my plan ready, so I didn't touch anything. Because if I don't prep, I don't trade. No good things will come out of that. Yesterday's short from the open, that would have been a great trade, basically.
Cool. What about you, Jagger?
I think
If you want to show it on the chart as well.
I think longs on gold probably from the bottom. It was kind of going one direction. I mean, shorting it to time the short when it was going lower, it was difficult, and also it was too mad. I mean, it was really mad. But early week longs from the bottom over here, maybe even yesterday longs in the morning were good. Yes.
And what would make you get into the trade? What's your entry trigger?
Gold moving and going higher. I trade gold in a very, very, very simple way. Like I just put up like simple reference points, value area lows, value area highs, and just wait for a reaction. And right over there, like maybe it is falling and slowing down for a moment. I will just try to get in at a good price. I would start to put up like with one micro. I won't even touch the thing with a normal contract size. But I will put up a micro, like a 50 tick stop or something like that. Maybe even a little bit more if I'm sure of the area. But then as soon as it will start moving higher in my direction, like the order flow confirms my idea, then I would add maybe 1 or 2 contracts on the go, and I would hold that for until the opposite materialize. So a slowdown, interesting area. So I think, yes, for example, you can use it's a trendy market, so you could use EMAs. I'm kind of against EMAs, just like using just only EMAs, but on trendy markets, of course, they will work. So that's a market. They will work. Absolutely.
Cool. Let's go to the giveaway right now, and then we will get to your questions, guys. So if you have any questions, get them in now. I'm going to get the giveaway wheel spin ready. And I'm going to let you guys say the names. So we'll go to you first, Jagger. You can say the first name.
Any question about Pamela Anderson? Okay, I'm ready.
Good luck.
Srikris, MFF. Srikris, you won.
Okay. Serge, it's all you.
Derek Buchert.
Congratulations. You guys will get an email within 1 or 2 hours with your credit. That was for $200 in TFD credit.
Congratulations, guys.
My guru won. Very cool. How much tick of SL on ZN? Stop loss?
Stop loss, I think. I would say 2 or 3. I use 2 or 3 tick stops. I tend to be very precise using a set of tools that you will never know. But 2 or 3 ticks, basically. You could go I don't know if it does make sense to hope for more honesty than 3. So I would stay within the 3 tick stop and just try to time your stop loss to your entries and cut the trade if it doesn't go like if you enter and you sweep against you like very hard, just try to cover and get out of the trade as soon as possible. Just don't hope. Yeah.
What do you think about MBO? And for anyone that doesn't know, that's market by order. Is that right?
Yes, market by order. I use it because I use Bookmap with MBO and an add-on called the Trader Map Pro, and which lets me filter the book and rearrange it with some useful ways to see the liquidity in a more organized way. So MBO is a really nice feature, and it's very nice that CME gives us, and yeah, we have that. So let's use that.
Perfect. Let's see if there's any more questions here. How safe is it to trade bonds in intraday? They must be less choppy, but are they volatile enough?
It is pretty safe, I would say. Sometimes they can be very boring, so you have to be relaxed, like low heartbeat, like a like a blue whale, low heartbeat, relax, and and just wait for the best chance to get in, and it's I would say overall that it's better if you already have an edge on equities, it will be better because it can be stressful because sometimes the volatility will be very low, like you can't trade because you will make up trades that doesn't exist. So it's better if you have a valve of relief on other markets if you get some edge there sometimes. No? So just yeah, that's the idea.
Cool. All right. I think that was a pretty informative stream. Do you guys have any finishing thoughts? If someone is looking to get into bonds, you have any advice where they should look?
Come on the Mr. Order Flow server, and we will help you. We are happy to help. And well, as the name states, it's about order flow, and there are many of us that trade treasuries and bonds, and so you will find a lot of useful information.
Yeah, we're gonna put the link to the Mr. Order Flow server in the description of this live stream.
Nice.
But yeah, thank you for coming on. Sergey, you have any word of advice for anyone looking to learn?
Thank you for having us on, first of all. And whoever wants to get into order flow and bonds especially, don't treat it as an isolated market or instrument. Try to look at it in the grand scheme of things, how everything is moving and interacting, and learn a skill set that you can apply to whatever's moving. Like, that's my...
Makes sense. Awesome. Well, this was fun, guys. We're going to put the link to your Discord channel in the description, like I said, so you guys can check it out. But yeah, I think everyone enjoyed it, even though it was kind of technical. But yeah, thank you, guys.
Thank you, guys. It was very nice
Thank
to
you.
meet you. And have a nice one. Take care.
Take it easy, guys. Bye.
Bye-bye.